It's been an interesting 6 months for the gold price. We've seen it push up to 1840, best levels since mid-February. So is this the start of a much bigger recovery in gold, taking it through 2000? Or actually, is it about to fail once again and slip further as part of this correction from last year's highs? I think it's really interesting where gold is at the moment. We've got this longer term uptrend we always look at when we look at the price of gold from 2018. And of course, the price accelerated last year to hit fresh all-time highs in August, up at 2,075. But since then, we've been in this correction. And we've seen a good run for the price, up, about $160 or so off the March lows. But you could take the view, well, actually, it's just a bounce back to this downtrend line and the market's going to sell off again. So as usual, in this video, I'll talk about what's been moving gold lately and what to look out for in the weeks ahead. Then we'll come back onto the platform, look at things in more detail and see if there's a trade to do here. We do actually have a trade running at the moment. So the usual mix of trades, natural gas and pound against the dollar. Two at the top, the ones showing the biggest open profits at the moment. Gold's not doing too bad. It's the trade from the video at the end of April. So buying in just below 17.75 an ounce with a stop at 17.10. The market is, $60 or so in our favor. So we're up 220 on the trade. So I wonder, do we want to take profits on that? Or actually, is there another trade to do here? I'll talk about gold for a bit, and then we'll come back and see if we can set something up. Hello, I'm David Jones from Capital.com, and I thought we'd catch up with the price of gold after what has been a pretty impressive week in terms of price gains. So as usual, in this video, I'll talk about what's been driving it, what to look out for, then we'll jump back onto the platform and see if we can add to that existing position. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, we now do these regular live streams every Friday at 2:30 UK time. If you're subscribed, you'll get a notification just as we're about to go live. Right, let's get into it and see what's been moving gold. So since the fresh all-time highs last year, the summer of 2020, we've had a distinct lack of momentum for the gold price, although momentum has been down. However, last week was the best week in terms of rises for the price of gold since November of last year. So we have seen some positive momentum over the last week. But technically, if you took a step back and looked at what the market's been doing since last August, it's still in a correction. We've had a succession of lower highs, lower lows. It's been winding its way lower. Although I do think the strength that we've seen recently has brought it to something of a crunch point, and it's break or bust, I think, for the price from where we are now. It's not been winning any friends with investors. If we look at exchange-traded funds that track the price of gold, in 5 of the last 6 months, they've seen net withdrawals. So investors taking their money out and putting it elsewhere. So it sounds like quite a drastic headline, but it only means that the assets under management have dropped by about 0.5%, but investors have been moving that elsewhere. This can often be a contrary signal because investors do tend to be wrong, retail investors, at major market turning points. So the fact we've seen steady outflows for 5 of the last 6 months could suggest that perhaps the fortunes for gold are about to turn for the positive. What's helped the market recently? Well, a weaker US dollar hasn't done any harm. We have seen the US dollar continue to lose ground. The dollar index is one good market to watch. We've seen that continue to push lower. Perhaps we'll get a bounce over the next couple of weeks, but that's helped lift the price of gold. And perhaps as well, stock markets have increased in volatility. So perhaps more volatile stock markets, the worry about inflation is leading investors to look to more defensive assets. I think that's something that's probably helped as well. But before we jump back on the chart and look at this in more detail, let's talk about the levels to watch. So I think we've got some obvious hurdles not far away from where we are now, highs from earlier in the year. For me, the big one is probably $1,875 an ounce. I think if it can crack that, it does look like finally the correction from those summer 2020 highs is over. On the downside, lots of support left recently by this rally that we've had over the last 6 weeks or so. I think for me, the most immediate obvious support comes in around 17.55. But as usual, to put some color on these numbers and see them in context of what the market's been doing, let's take a look on our trading platform. As usual, let's start off with our big picture view on gold, going back to those August 2018 lows. Great trend, came quite close to the trend line again in March of last year on the big sell-off, and then really took off during the summer, trading up to 2,075 in August. But since then, the story has been one of a correction. Traded below 1,700, trading down to 1,675 this year over the last few months. And I think it's really interesting where it is now. If you wanted to go short gold, then from a technical point of view, it could be a great entry point. But let's take a look. So we have been in this correction since those highs from August the 6th last year, thereabouts. The trend line has done a pretty good job, although it's only been touched a couple of times. So it's not actually a textbook trend line at the moment. But if the price of gold is going to run out of steam anywhere, then we're here. So I think it is interesting up at these levels. So for me, perhaps to add to my position, what I'd want to see is the price break out through these late January highs around about 1880. I think that could be one thing that could tempt me to add to the position in gold. So maybe there's an order to do here. Looking at the last couple of days and the RSI down here, the RSI has gone overbought over the last couple of days. Again, a suggestion that perhaps the price has gone far enough. The last time we were this overbought was actually in early Jan, when it had that run up to the trend line back then, although we didn't know it was a trend line then. So I think it is interesting up here. I suppose if you were going to sell short, one idea is to sell short with stops above 1880 up here, because that trend is still down. But saying all that, we did have this double bottom pattern in March and the market's broken out, although it probably has already hit its target for that. I think it's going to be a really interesting market to watch these levels, real bounce or bust time. But what I'm going to do, I'm going to flip it over to a short-term chart, and we'll take a look at this recovery from March and see if I can plan a trade if that trend line breaks. So here's the run off those March lows at 1675, 1680. Good trend on the way up, touched a few times. The last major touch of the trend line came in around 1770. At the moment, at least, that recovery is still going. So we've got lots of conflicting trends here. We've got the trend for the last 6 weeks up, the trend for the last, 9 months since August last year down, and the trend for the last 2.5 years plus up. So trends all over the show. We do have that existing position in gold. So what I'm going to do, I'm going to set a trade up, but I want to see it break this trend line. So I'm going to put an order to buy. I'm long already. I've got a position already. I'll add if the market breaks through 1880. So if it breaks 1880, put me into the trade. And to make things easy for me, I'll put a stop at 1800s. If we flip back to the daily, is whether it can break through this level. So it's a pretty simple setup. I think, for me at the moment with the trade running, I'm quite happy to sit on it and maybe just wait this one out and see what happens down here. But let's just set that trade up, then we'll look at things in more detail. So I'm ready to go. The price at the moment is trading at 1831, 1832, that sort of area. I'm going to buy 4.5. If the price gets to 1880, and you can see that highlighted on the chart. So if it moves through that downtrend line and we get a bit more momentum from here, I want to be a buyer. If that order gets filled, put a stop in at 1800. So give it a bit of wiggle room and see what happens. Let's place the stop order. It's our usual risk, which I'm sure you're familiar with now if you've watched these videos of just over £250 in this example. Let's place the stop. So I think we've got some interesting times ahead the next few weeks. Like I say, perhaps at the moment, because we've got these conflicting trends, the wiser thing to do is sit this one out. But if it can get to 1880, perhaps it's finally the end of this correction. Next target for me will be a run up November, January highs around 1960, see if this little recovery can carry on chugging along. At the moment, even if we did get a bit of weakness down to 1760, it looks like a potential buy opportunity into this recovery. So really interesting market to watch to see if we get a big move one way or the other. But for now, the recovery over the last 6 weeks is still going. Let's see if gold can push higher. That's it for the update. We'll see if gold can finally this month shake off that correction. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.